Here's a summary of Vertiv Holdings Co.'s Q4 2025 earnings call, designed for clear and concise delivery. Good morning. Today, we'll be reviewing Vertiv Holdings Co.'s financial performance for the fourth quarter and full year 2025, with a look ahead at our projections. Key financial highlights and performance. Vertiv delivered exceptionally strong results for the fourth quarter and the full year 2025, exceeding guidance across key metrics. Revenue. In the fourth quarter, organic net sales increased by a robust 19% year-over-year, primarily driven by remarkable strength in the Americas, which saw 46% organic growth. APAC and EMEA experienced declines of 9% and 14% respectively in Q4. For the full year, net sales achieved 26% organic growth. Profitability and margins. The adjusted operating margin for Q4 was a healthy 23.2%, up 170 basis points from the prior year. Adjusted operating profit reached $668 million, a 33% increase year-over-year. Adjusted diluted earnings per share, EPS, for the fourth quarter was $1.36, a 37% increase from Q4 2024, and 10 cents above prior guidance. For the full year, adjusted diluted EPS was $4.20, up 47%. Cash flow. Adjusted free cash flow for the full year 2025 was approximately $1.9 billion, with an impressive conversion rate of 115%. Q4 saw a significant increase in adjusted free cash flow, up 151% year-over-year, due to higher operating profit and working capital efficiency, aided by substantial advance payments on large orders. Backlog. The company's backlog stands at a very strong $15 billion, more than double the previous years. Orders were exceptionally strong, with trailing 12-month organic orders growth at 81% and Q4 organic orders up an astounding 152% year-over-year. The book-to-bill ratio was an impressive 2.9 times. Management's forecasts and future outlook. Vertiv provided a confident outlook for 2026, full year 2026 guidance. The company projects adjusted diluted EPS of $6.20 at the midpoint, representing 43% growth. Net sales are expected to reach $13.5 billion at the midpoint, with 28% organic growth. This growth is anticipated to be led by continued strength in the Americas, with high 30% growth, followed by APAC at mid-20s% growth, and EMEA expected to be flat to down mid-single digits. Adjusted operating profit is projected at $3.04 billion, with an anticipated margin of 22.5%, reflecting 210 basis points of expansion. Full-year adjusted free cash flow is expected to be $2.2 billion, a 17% increase. First quarter 2026 guidance. For Q1 2026, adjusted diluted EPS is projected at 98 cents, a 53% growth at the midpoint. Net sales are expected to be $2.6 billion, with 22% organic growth. Adjusted operating profit is forecast at $495 million, with a margin rate of 19%. Significant risk factors. While management expressed strong optimism, the following were implicitly or explicitly mentioned as areas of focus: supply chain dynamics, continued cooperation with suppliers, and diligent scaling are crucial to meet demand. Macroeconomic conditions. While improving, the impact of macroeconomic conditions, particularly in regions like China, remains a factor. Execution of backlog. Converting the substantial backlog into revenue and profit requires continued operational execution, including capacity expansion and supply chain management. Volatile order patterns. The inherent lumpiness of orders in the industry, though becoming more system-level, requires careful management and communication. Tariffs. The company anticipates having materially offset unfavorable margin impacts from tariffs as of the first quarter of 2026. Highlights: accelerating AI infrastructure build-out. Vertiv is strategically positioned at the center of the accelerating AI-driven infrastructure build-out, with data centers being a key beneficiary. Technological innovation and solutions. The company is actively defining the market with innovative solutions like OneCore, an end-to-end full data center solution, and Vertiv SmartRun, a converged and prefabricated white space infrastructure solution. Strong service portfolio. Vertiv's service business is a critical competitive advantage and a robust source of recurring revenue, with life cycle services orders growing over 25% year-on-year. The acquisition of PerchRite significantly strengthens their fluid management capabilities. Customer relationships and ecosystem partnerships. Deep relationships with data center industry leaders and ecosystem players provide significant visibility into future workflows and architectural needs, allowing Vertiv to develop solutions ahead of customer demand. Disciplined capital allocation. The company maintains a disciplined and forward-looking approach to capital, increasing CapEx to 3 to 4% of sales to enable growth, while also maintaining strategic flexibility. Lowlights. Regional sales declines. Q4. While overall Q4 performance was strong, APAC and EMEA experienced sales declines of 9% and 14% respectively, primarily attributed to macroeconomic conditions in China and continued market softness in EMEA, although signs of recovery are emerging in EMEA. Margin pressure in specific segments. APAC saw a 270 basis point decline in adjusted operating margin primarily due to volume deleverage, and EMEA's margin trend is expected to continue into Q1 due to lower operating leverage from sales declines. Most important statements from management. Giordano Albertazzi, CEO. We are still in the early innings of this secular growth trend. Vertiv Holdings Co.'s position in this market keeps getting stronger. Our technology leadership and global scale, along with our service and operational capabilities, are not easily replicated. And we keep widening that gap. Vertiv Holdings Co. is not choosing between today and tomorrow. We are winning now and winning later, positioning us to create value both now and well into the future. Our $15 billion backlog is more than double last year's, and up 57% sequentially. The shape of our backlog is not very different from what we saw a year ago, yet it is more elongated into the 12 to 18-month window. This is very consistent with a very strong Q4 order intake. We are leading the industry in orders. We are scaling. We are very well positioned to expand our market leadership and drive the industry forward. Craig Chamberlain, CFO. We delivered $910 million of adjusted free cash flow, up 151% from the prior year fourth quarter, driven by higher operating profit and working capital efficiency. We exited the quarter with net leverage of 0.5 times, giving us significant strategic flexibility. For 2026, we are projecting adjusted diluted EPS of $6.20, representing 43% growth at the midpoint. This improvement continues to show strong profit growth from the prior year. We believe this outlook underscores our confidence in the market growth and our ability to continue to drive excellent performance. In conclusion, Vertiv has demonstrated a highly successful Q4 and full year 2025, driven by strong demand and strategic execution. The company is well positioned for continued significant growth in 2026, fueled by the ongoing AI infrastructure boom and its robust product and service offerings.